Good afternoon, everyone. Sorry for the hiatus. I am back. New time. I think it's a little bit better. Not so rushed trying to get trades closed at the end of the day and so forth. So welcome, everybody. It's Gabe Velazquez here, Transparent Trading Solutions, for our January 31st, Tuesday, mid-week session. How you doing? Yep. Hi, Henry. So I've been away for about a week now. So let's, actually nothing really, not a lot of change in what's going on. In fact, I mean, we've had a lot of gyrations back and forth, but at the end of the day, not a lot going on. Now, tomorrow's a big day, everybody, as everybody knows, unless you've been living under a rock. Yep, we have a Fed meeting. We have Meta earnings after that, and then the following day we have Google, Apple, and Amazon, and then the day after that on Friday we have non-farm payroll. So we have quite a bit of market moving data coming up, and it's really interesting. So let's start again with the S&P. Everybody, again, if you want to sign up for the newsletter, I'm going to have a class here in a couple of weeks as well. You know, I do this twice a week. So look out for that. If you want to go ahead and join me for a free session, actually 5 free sessions in our morning market overview. Go ahead and hit the link below and all that good stuff. So yeah, we just finished out the month. Let's go ahead and start with the S&P. We are coming in, as you know, we're doing a lot of kind of options plays right now in the SPY. So just to kind of recap a little bit of what we did last week, we came in to last week with a set of calls and puts. We actually got out of the puts at 391 and got out of the calls at 404. So we actually did pretty well on those. We have a new set right now, and the S&P really just surged at the close here, as everybody saw. 40.85 is the closing price. And in a nutshell, really, since I was with you a week and a half ago, we had Microsoft earnings that took the market down a little bit. But in a nutshell, we have been, I would say, now since last week is dropped, since we had that drop for Microsoft, essentially in a range between 4K and 4,100, right? And it's going to be interesting. The next level on the S&P, if we can take out 4,100 tomorrow, which, tomorrow's going to be very interesting. I wrote about it over the weekend, interesting in that the market just doesn't seem to want to believe the Fed, right? The Fed comes out every single time, basically tells you, we're going to keep interest rates. We're going to keep raising interest rates. We're not going to back off, and so on and so forth. And apparently the market doesn't believe it, because you can see that by the resiliency of the market. You can see by the technology sector, and so on and so forth. So it's going to be really interesting if it happens again. We've already we've seen a rally, although it's been very, very choppy, very kind of in one sense, it's been very choppy and very challenging to trade on a short-term basis. All these back and forth movements. But hey, good afternoon, JT. Welcome back. So the next, again, I've been talking about this on the S&P. I actually thought last week, where'd you hear that from, Jim? Yeah, I don't know. That wouldn't shock me. I have to tell you, maybe that's what it would be a shocker if they did that. I kind of threw that. I think you read. Yeah, I get it. You read it in the newsletter this weekend. It would be a shocker, and that would really knock the market down. Who knows? I don't know. Nobody really knows, unless the only people that know are the Fed, obviously. So getting back to the charts, everybody, um, levels to look at. So the first level, as I've been talking about recently, is essentially that 4180. The December high, which, if you recall, was very similar. We had a very kind of benign inflation number in pre-market. Remember, I don't know if you guys remember, that was early December. That was the November CPI number. We had that monster kind of spike, and then essentially gave it all back for the entire day. In fact, we dropped from 4180, took it all the way down to 3800. So it's going to be interesting, really fascinating tomorrow to see what the market does. But on a chart level, we've stalled clearly at the 4112 area, and pulled back hard, about 100 points. Now we're right back up again, kind of in no man's land. And again, if you have been attempting to trade these kind of gyrations, it's been a rather challenging. If you're a short-term trader and nimble, I guess you can do okay with this. But even yesterday, you saw there's a bunch of intraday choppy trading. So that's kind of the levels I'm looking at. On the downside, looking at about 39.53. We came really close. Had a level drawn out at this morning on the S&P at 40.05 and a quarter, 4005 and a quarter. Came up shy in that, and you saw because I'm thinking maybe we get down to 4K. There is a little level there, but came up shy, and then obviously rallied about 80 points from there. But that's the kind of market we were in. Back big swings back and forth with no follow through, right? So if you are not nimble in taking your profits on some of these, you give it all back very, very quickly, and you're getting, probably depending on the levels that you're drawing out, you may get, if you get hit, may get 3x, and then the thing falls off if you're not careful. So that's kind of where we're at. My view is, again, just looking at the charts and looking at the VIX under. I wrote about this weekend. Looking at the VIX under 20, I think we get a rally, and then the Fed knocks everything down. So I'd be very careful to chase any rallies at this point. On one hand, but on the other hand, there aren't a ton of levels until you get above 4160 on the 4180 on the S&P. Now the Nasdaq, quite different. Interestingly, the Nasdaq did, in fact, Friday turned down from the December highs. So if you pull up your chart of the Nasdaq futures, look at an 8-hour chart or a daily chart, and you can see we came right up to 12,300, let's call it, which in fact were those are the same highs that I just spoke about on the S&P. Those were in fact the CPI highs in December in the Nasdaq. So that just shows you the outperformance of the Nasdaq here recently. So we did pull back, came down to 11,876, which we actually did have a level there. And again, we're kind of in no man's land. There is a level coming up here around 12,200 going into the Fed, which may be interesting even tonight. If you want to check it out, it's pretty obvious there. It's the pause from Sunday, and then we had that big drop off, and then the subsequent rally. So that's the levels there. 11,200 ish right in there. And then clearly above that, I'm also looking at a level above that, a few hundred points above that, right around the 12,450. You can see that base drop on a 8-9 hour chart. So those are the levels on the distribution side I'm looking at. And then below, there are several levels. 10,800. The one I'm more focused on is 11,540. Right along there is a big. There's a nice base drop. So there's a lot of levels. Now, one of the things also that I've been harping on with my members is you can spot, especially in this environment. And I don't know if you guys have been through this lately here. There's a ton of levels out there, right? I did a session at the end of the year talking about quality and which levels are no good and so on and so forth. So, even though, you can find all kinds of levels out there, especially when the market gets extended in the short term and has this massive swings, you got to wait for the market to extend down before you buy it. And conversely, as an example, on Friday, if you chased or bought any kind of shallower pullback on the retracement, the S&P, the NASDAQ actually pulled back almost 500 points. So you had to wait for a much deeper pullback if you were going to buy this thing. And now the same thing applies now. I think, you can't chase any down moves. And again, still, I would say a battleground. I still think there's a lot of debate. Still people calling this a bear market rally. I find that interesting because a lot of you technicians, you had, so first, you were talking about, well, it's under the 200-day moving average, the bears, right? The bears, the bearish camp. We're talking about, well, the market hasn't, it's been pretty much spent all of last year under the 200-day moving average. Okay, granted. We had a massive downtrend line from, again, from all the drop, all the sell-off from last year. But here's the thing: we've basically look at the S&P. We're above the 200-day moving average. Depending on how you draw the trend lines or whatever, you're still above the trend lines, and people are still calling this a bear market rally. So which is it? Right, everybody? you tell me. What is this still so what, again, do you have to have the market rally like 25% from the bottom and then you're going to be comfortable buying it? You get the idea, everybody, right? I just don't understand that, but it is what it is. That's part of the challenge I have with, as you all know, part of the challenge I have with conventional technical analysis. But anyways, so here's where we're at. And in a nutshell, everybody, I'm not going to spend a lot more time here because we could sit here for an hour and talk about this. I did that with my members this morning in our morning session. In a nutshell, we are still, by and large, in these massive ranges. I don't see that changing. I don't see any kind of, if you think that this is the beginning of, again, lots of chatter about this is the dawning of a new, bull market. You got, all these stocks that are, like Tesla gone from 105 up to 175 and so on and so forth. I don't see us moving significantly higher or significantly lower. I still think that we're still going to be in these massive ranges. You got to be buying low and selling high. And the next bull market, the next bull phase will not come about until two things happen. And I've written about this in the past. Two things have to happen. First, you have to have capitulation, which even now we still haven't had. I still believe we're going to have that this year at some point. Some black swan. I have no idea where it's going to come from. Secondly, you cannot have a sustained run in stocks like we had in 2020, 2021, if the Fed does not stop raising. So that's your thing, right? And until they actually tell you we're done raising rates, not even pivoting to lowering rates, you will not have a sustained bull run until that happens. So those are the two things. And so for that reason, I believe we're still going to have these massive swings back and forth, which is great if you subscribe to the notion of buying low and selling high. In addition, it's going to be a stock picker's market, right? There's, you can pick off Tesla at 100, traded 75 points. And again, I'm actually looking to, short some stock right now coming up here. Tesla at 200, TSM at 105. You're starting to get that type of thing. So that is kind of where I will sum up the equities products right now. Okay. All right. So that's my little 5 cent, 10 cent, whatever you want to call it. Okay. Bonds, key, also been talking about that. Not a lot going on in the bond market. One thing I would watch, and clearly tomorrow is going to be very significant for the bond market. I've been talking about the bond market kind of thumbing its nose at the Fed. Still, today we had a little bit of a pop on I guess there was some kind of data that came out. As you can watch the 10-year, which is really the focal point here. 113.26 is going to be a critical level on the 10-year. Okay. And you can see just big swings also there in the bond market. We had a breakout attempt that failed, came all the way back down. So all in all, similarly, I think, but you got to hold on to these yields, because if yields start really climbing again, and i.e. the bond market really starts selling off, that is also part of this thesis where, the bond, if that happens, I think stocks fall back down again. Okay. All right. So that's all I want to cover on that. Dollar, not a lot, literally hasn't done anything since I was with you a week ago. It's built basically range trading 101.50, 102.75. You can see that on your charts. Pull up your daily chart. I am starting to get a little bit more bullish on the dollar. It keeps holding. That's that pivot low I keep talking about, that main May from last year, 101.5. You can see it on your weekly charts in the dollar. The dollar is not responding to stocks at the moment. But I do believe tomorrow is going to be another kind of pivotal day, if you will, for the dollar. And if you just go through all your currencies in the futures market, they are pretty much mirror the dollar, all range trading, all choppy, not anything to talk about there, including gold and silver, right? So silver been in a big old range, 20, 20s, very clear cut range, 23 to like 24.50. I mean, it's a mess. Gold kind of channeling higher, but still not making a bunch of progress, hanging around for the last month now. Also, albeit kind of a little bit of a higher kind of channeling action here, but overall 19, let's call it 15 to like 1952 range, and still can't break out above 1952 to the upside. So that's again due to the dollar not able to get moving as well. Until the dollar gets moving, these metals, even including copper, by the way, copper I've been talking about, that's also got stuck. And in fact, we're trying to buy copper right around the $4 mark as well. So there. Now, oil. We've been involved in oil. I think I don't know if I was with you guys when we were in the USO. If you look at your daily chart of oil, 82.50, very clear defined resistance. It's really interesting how these markets, right? Sometimes I say it's not rocket science. You can clearly see the 82.50. It's bumped up against there 3, 4, 5 times. Probably due for a breakout. We were long some puts on that. We covered those today, and now we're net long also in oil. We have some USO 81 calls. USO closed at 70. Where was USO today? 69.32. I'm sorry, 72 calls. Not did I say 82? 72 calls. 71 calls. I'm sorry. Yep. So we are net long now oil using calls. Also, we bought. I've been talking about nat gas. So we did take a position in. We actually took a position in Boyle. I don't know, and the rationale behind Boyle is it's a really small position. Yep. It's basically just a risk reward situation, Henry. Right? If you look at your weekly chart of oil, 2.5 MBTU is like a monthly accumulation area. Yep, exactly. And taking a very tiny position in that and Boyle. I don't know if you guys. I don't have time to go through that right now, but Boyle. Look at cold. I did that actually. We spent about 20 minutes on that this morning. Look at what cold. That's the inverse. That's the short leveraged UNG or nat gas. That thing went from 10 to 45 in the last 2 months. So if the premise here is if nat gas goes even just up to 6, we bought it at 7 and change. That thing is going to go to 30. That's in a nutshell. And if it doesn't work, we got a really tiny risk. And it's based on that. And the fact that it's been basing. So if you've been watching that gas over the last couple of days, it's lost its downside momentum for the moment. It's been kind of basing. Again, doesn't mean it can't go lower. Clearly, the base could just be another pause and then another leg down. But with all the fundamentals underlying that market, and here's a little fundamental action here. Reason it's tanked so much is because Europe has had unseasonably warm weather, as we know. They've actually stockpiled after that Ukraine Russia thing. But here's what's interesting. Now that we're coming into the spring, all of that's going to go away, right? And in fact, look at the seasonals on nat gas. Everybody assumes, the obvious thing would be, well, it's winter, so, nat gas should go up. Well, that's not the way it works. It's always 6 months in advance, right? Because if it was that easy, then everybody would just be buying nat gas and get rich every winter. If it was that easy, right? It doesn't work that way. Think about that for a second, right? So look at the seasonals on nat gas. Okay. And then lastly, then we're going to wrap it up. Grain markets, we're trying to get long soybeans. That looks like grains are also perking up. Wheat above 7, just broke out actually about 762, but again, it's been really choppy. Yep. Right, JT. Think about that for a second, right? Yeah, let's buy nat gas every winter, right? Let's mortgage the house every winter and buy nat gas. How easy would that be, right? What was it? What is the ETF for? Cold. Thank you. Who's that? Who be that? Yeah, that's the way to go, JT, right? Do it since most people lose money doing this, it pays to be a contrarian, doesn't it? Hey, Barbara, how you doing? Yeah, I tried reaching out to you. I don't know if you got an email from. Okay, everybody. I think that's gonna take care of it. Exactly. Yep. Yeah, the herd sometimes does well. Okay. All right, everybody. I think that's going to do it. Just to wrap things up, everybody, we got a Fed meeting tomorrow. Expect tons of volatility. Been challenged lately, back and forth, back and forth. Got to be super nimble. Not my style of trading, and unless you're super nimble. That's it's been a bit of a challenge. I have to tell you, January was a bit of a challenge in terms of kind of back and forth. So yeah, stay safe out there. Be nimble tomorrow. What typically happens is all kind of gyrations. At the end of the day is really where the market settles in. And then on top of that, again, you got Meta after. You've got all these mega caps on Thursday, Amazon, Google, Apple, a big one, and then non-farm payroll. So boy, exciting stuff coming up. Lots of volatility. Stay safe out there. Okay. And I will be back on Friday, 1:30. So we're going to change that. I think it's a little bit better because I felt rushed. And so we're going to try and close out some trades during the day and be with my members. So I think that half hour really makes a heck of a difference. So all right, everybody. Again, if you want to sign up for the newsletter, I do have another class coming up. I'll post that as well. You guys that want to get in touch with me, support@transparenttradesolutions.com. Hit the website and all that good stuff. If not, have a great rest of your week. I'll talk to you guys on Friday. Boy, who knows where we're going to be at the end of Friday, right? We could be down 100, 200 points or up 100 points. It's going to be really interesting. All right, take care, everybody. Have a great rest of your week.